All right. So this today was insane. Today is probably the absolute closest, I'd say, of a real bubble popping for tech. There's been layoffs, there's been cutbacks, there's been different things in the tech sector. This is insane, though. So, Silicon Valley Bank. Most people have probably never heard of this bank. It is, I think, in the articles they say, but I think it's like the 16th largest bank in the world. It completely went under today. A couple days ago, they put out an ask to other banks, to federal government, to various people, saying that they needed about, I think it was like $2.25 billion just to keep everything afloat. And so what happened is that created, like the Ghostbusters, right? Like mass hysteria. And so everybody pulled out. Everyone was pulling out their money. Everyone was pulling out of Silicon Valley Bank, and it created a bank run. If you don't know what a bank run is, it's similar to what happened in the Great Depression, where there was no confidence in a financial institution, in a bank. And so everybody runs and deposits all their money. They run and they grab it all. They grab it. We need money. And because of that, it causes them to, it makes the doom and gloom happen even a little bit quicker. And so this is from the FDIC. So if you bank in America, you've probably seen this, right? FDIC insured. It's a $250,000 insurance that if you have a bank account with a bank, that your money is insured with the federal government up to $250,000, which in theory is amazing. If you were a individual consumer, although even nowadays that's not the most, right? Like when this was created, 250,000 was a lot. Now, it's still a lot of money. But the problem is there is no additional insurance. There is nothing else if you were a business account. And so here's what happened. FDIC releases this. Silicon Valley Bank, Santa Clara, California, was closed today by the California Department of Financial Protection and Innovation, which appointed the Federal Deposit Insurance Corporation, FDIC, as receiver. To protect insured depositors, the FDIC created the Deposit Insurance National Bank of Santa Clara. At the time of closing, FDIC as a receiver immediately transferred the DINB to all insured deposits of Silicon Valley Bank. All insured depositors will have full access to their insured deposits no later than Monday morning. That's $250,000. Now, this is truly one of the biggest banks in the world. You probably have never heard of it. If you've never worked in tech, if you've never worked in Silicon Valley, if you've never worked in Startup Landia, if you've never watched the HBO series Silicon Valley, you do not know that this bank existed, because this bank is a commercial bank that focuses heavily working with startups. And traditionally, it has been very successful. In fact, this bank, unlike probably most banks out there, hits well above its weight class. It is kind of the gold standard if you were in the startup world. The problem is that means a lot of their wealth and a lot of the things attached to it are with tech. And because tech has taken a downturn in the market, or let's say a more naturalization in the market, then their value has drastically decreased. But the amount of people they kept working with and held their money for kept the same, if not increasing, because they're, more people. Everyone's always trying to, create a new business or whatnot. So they had to sell some bonds. When they sold those bonds, they actually took almost a $2 billion hit, a massive fucking hit. And then it self-propelled itself to where they needed more money, and now we're here. And so the problem is this $250,000 is per account. Now, these are businesses account. Remember I said commercial account. Roku has $487 million in cash at failed Silicon Valley Bank. Roku is guaranteed to get $250,000 of that $487 million. There are genuine companies that are going to go under because of this. And again, like Roku is not something you would consider startup landia, right? Tech, like, yeah, tech, but maybe not startup landia, right? It's not the first thing that comes to mind with Silicon Valley. Here's another really interesting thread. This is a CEO from Rippling. Rippling is a tech company, a startup that works with HR, and they were using Silicon Valley Bank. People did not get paid today. We, Rippling, discovered yesterday that Silicon Valley Bank had unexpected solvency challenges. Just now, we learned that the FDIC had stepped in and effectively shut down SVB. Rippling has historically relied on SVB for payment rails for our payroll and other products. In light of yesterday's news, we immediately accelerated a planned switch to JP Morgan Chase. Effective immediately and going forward, Rippling payroll runs will process through JPMC. However, pay runs in flight for today out of SVB have not been paid. The latest we heard from SVB this morning was that this was an operational delay and funds will be released. However, FDIC involvement makes us skeptical of the assurances we are getting from SVB. Our top priority is to get our customer employees paid as soon as possibly can, and we're working diligently towards all available channels, trying to learn what FDIC takeover means for today's payments. We have contacted customers with configuration change they need to make for us to successfully process their payroll going forward via JP Morgan Chase & Co. Going forward, payroll runs through Rippling will have no exposure to SVB, but today's payment delay is the result of payment runs initiated early this week. Funds in flight, the SVB are full focus on getting these employees paid as quickly as possible. Literal ruse sip right here. This is bad. This is really bad. NPR kind of gave a really solid breakdown here. A bank that caters to most of the world's most powerful tech investors collapsed on Friday and was taken over by federal regulators, becoming one of the largest lenders to fail since 2008 global financial crisis. California's banking regulators shut down Silicon Valley Bank and put in a receivership that effectively gives control of the bank to the FDIC, which created an entity to oversee it. Regulators announced that the takeover was effectively a run on the bank. Depositors rushed to withdraw their money amid fears SVB wouldn't be able to meet redemption requests. It was a collapse that sent shockwaves across the banking industry, hammering shares of other smaller regional lenders. Here's what to know about SVB. What is SVB? Like I told you, not in the same league as Goldman Sachs, Silicon Valley, punched above its weight during its 40-year history. Based in Santa Clara, its clients include venture capital firms, startups, became a big player in the tech sector, successfully competing with the big-name banks. How did SVB go insolvent? Get fucked? I wouldn't like, if you have any sort of capital in the world or you have any concern that you might lose your job, I probably actually wouldn't make that statement. I kind of showed this earlier, but like Roku's out, 487 million. Like entertainment sector is going to get hit hard with this. They mentioned also Roblox, Vimeo. I'm going to be honest with you. A lot of people got hit hard with this. A lot of people got hit hard. They were a top 20 bank. Yeah, I think they were the 16th in the world. 16th in the world. So a lot of people are going to be impacted by this, but entertainment does not go unscathed with this. But in short, they really developed a niche in the envy of the banking space. They will provide all the products, services, the sophisticated technology companies, as well as sophisticated venture capital, private equity firms would need. They found a niche, right? In their backyard, they became the bank for startups. And their wealth up until this point has been, again, as NPR puts it, punch above their weight class, right? Because they don't have the complex structure that some of the other banks do. Silicon Valley's business boomed as tech companies did in pandemic. That filled the lenders' coffins, and SVB had about $174 billion in deposits. If you guys don't, what they're saying is tech companies did very well in the pandemic, which means they had a lot of money they were holding on to on paper. Banks don't usually, as Hammered said in chat, they don't physically hold on to that money. They invest in that. That's how banks work. They take that money because the likelihood that people would want to withdraw 174 billion in deposits is highly, highly unlikely. So what do? They go and they invest more. They buy bonds, they buy stocks, they venture capital, especially because it's Silicon Valley Bank. They find their next venture, they invest that money, which most people are happy with because it fuels over into itself and it makes it more successful. So during the pandemic, Silicon Valley Bank was like, it's go time. Let's ball, right? Like, again, we're poised to be, we're in the best position because when everything else was tanking, who was cranking? It's like Zoom. Look at what Zoom stock was, right? You think of look at what was killing it. It was the tech sector, because they were operating full steam ahead when most industries were shut down and all sorts of other things, right? So that's what they mean by deposit, 174 billion. There was a lot of money that their companies and the people that banked with them were making. They had a lot of money in the bank. But in recent months, many Silicon Valley's bank clients had been withdrawing money at a time where the tech sector as a whole has been suffering. SVB said earlier this week, in order to make good on those withdrawals, it had to sell part of its bond holdings at a steep loss of 1.8 billion. Again, because insurance rates went up, they had bonds at a lower insurance rate, so they're selling at a loss, right? They bought in this situation. They bought high and sold low. Bonds and stocks have been hammered since last year as the Federal Reserve raised them aggressively, as we noted, wanted to par down its bond portfolio to avoid further loss. But that announcement spurred the bank's clients, who got worried about SVB's viability and then proceeded to withdraw even more money from a bank. Textbook definition of a bank run. Yes, that's what we saw in the Great Depression. Oh, by the way, Dan in chat says QREM, it's the end of the world. That's why I actually played this. That's actually I played that song on my just starting screen. But so this led to a major slump in SVB shares. Bank stock price saw by 60%. And again, the writing was on the wall. It got down to such a low point that they hit the threshold where the FDIC literally had to step in. They hit failure. They hit actual failure. So what does this mean for other banks? Though the problems appear to be isolated at SVB, the run on the bank sparked concerns of the banking sector as a whole. On Thursday, shares of all kinds of lenders, including big banks, sagged, and Bank of America were all down 5%. Investors fear that other lenders, especially smaller regional ones, would suffer a similar surge of withdrawals and would struggle to meet redemptions. That is like that is a Great Depression. Like that's not even what happened in the recessions. Like all of the big recessions that we've hit, or even the housing crisis that we hit, like the housing crisis was interesting because it more folded over on itself, but the Great Depression really happened because it was a bank run. And that's what we're running into right now. And that's a general fear. Like this is very similar to what happened in the Roaring 20s. All right. 2023, I'm talking 1923 out here, you know? This is a very similar scenario of that versus the way mortgages were. How the housing crisis happened and how banks crumbled was they were just honestly like interest rates got up and they were giving out way too much money to people and to things that they could never get the money back. So it's like, here is all of our money and we're going to give it to you because we're expecting to get all of that money back and 20% plus on top of it. But the problem was they shouldn't have ever gave that money out and then they were on the hook for it. And so the whole sector of banking crumbled over on itself, right? Because eventually someone could only have 5 mortgages right? Because they wanted to have 5 properties and they were not in a place financially to do it, or someone that wanted a million. And another thing is too, the value of houses kept going up, right? This was the first time we really kept seeing big spike of housing go up. And so what used to be a $200,000 house is now $1 million house, and lenders love it because that means they make more in interest. And so it just, the whole system fed over on itself. And eventually it was truly a house of cards, and it fucking crumbled on itself. This is a little bit different here because this is a self-fulfilled prophecy, because people are worried. So they withdraw, or they move, or they transfer, or they hold on to it. And in that process, again, because banks don't actually hold that money on hand, and because $250,000 is actually so little now, especially if you're talking about a commercial bank, this is like I will say, if we had a very pro labor and a pro regulatory government environment, this would be a good time to basically really revamp all of the FDIC, because that number's been around since I was a kid, and even $250,000 back then meant a hell of a fucking lot different than a $250,000 means right now. So that's where we're at. That's as in the macro sense of banking. This hit the tech sector. Now, like I said, there's a lot of companies though, and I would say a lot of wealthy individuals that are going to get absolutely fucking smoked. And there are companies right now that can't make payroll. They can't make anything because they had all of their money, right? And that's the unique thing about Silicon Valley Bank, is they could loan you money, they could invest in you, and it was a place to store your money. It was truly an all-in-one solution if you came to them and said, hey, I got a Series A and my backers are, name your favorite tech bro, or his company, or his venture capital firm, or Sequoia Capital, or whoever the fuck. And we want to, work with you. And historically, that's been fine. That's been fine. That has been an okay method for how they've operated for many years, because that was like, if you have, usually in the past, if you have those people behind you, those are the powers to be. They know how to grow. They know how to scale. They will get you the right people. They have the connections. Your company is going to usually grow and grow and grow, and there's not a concern. And again, tech sector up until now, since the .com boom, hasn't really fucking tanked much. Even if you look at the 2008 housing crisis, I would say it probably just gave more real estate to tech companies. Tech companies had a lot of cash on hand, so that's probably where you saw really big expansions happening from places like Google, right? Like the Austin, they're like downtown tower that like they've been working on and different things. Like you saw more actually expansion, I think, in the tech sector. And I'm sure there's probably some articles and that's probably a mixed bag, but ultimately tech was not hit like nearly as much as the rest of the world hit, right? Last time the last time the tech sector has really been hit was the .com crash in 2000, right? And if you're unfamiliar with the .com crash, it was the internet had just come out and it was the Wild West. And anybody that had a good .com name was getting a lot of traffic because people would be like, plants.com. And then you can get plants shipped to you. I was like, oh, this is great. And then they started to get a lot of customers. Venture capital was really interested in it. Banks were interested in it. Everyone wanted a piece of it, right? And so eventually it just, pets.com is another one, like toys.com, all that kind of stuff. And it actually, what's funny is the .com crash is eventually what led to a lot of commerce crashing. But all of those websites, like ebooks.com or whatever, they all were out there, like dvd.com or edvds.com, like all that kind of shit was out there. And eventually they all got way too much money because everyone thought these were just fucking, this was it, right? They thought this was the next well, at the time, we wouldn't have said Amazon, but they thought it was going to be the next Walmart or whatever. But the equivalent nowadays is they thought it'd be the next Amazon. So they thought it was a solid. And the problem is there was too much going on. They weren't really looking at their margins. They weren't really looking at scale. They weren't really looking at any of this stuff. And eventually the industry folded over on itself. And the best way I could explain that to you is, if you ever watched Forrest Gump, right? You ever watch Forrest Gump? Lieutenant Dan, Forrest Gump, they're out on a stripping boat and a storm hits. And what happens? Well, Lieutenant Dan is a little eccentric, but they weathered the storm. They weathered the storm, and the only boat left standing was Bubba Gump's Shrimping Company. And they became the biggest shrimpers out there because they literally just had the only boat. And what's funny about that is they used to be the worst. Bubba Gump Shrimping Company was actually not the best. And they struggled until there was no competition. And the companies that weathered the storm of the .com crash were Microsoft, Google, Amazon, Apple, all these companies that are just gold standard today. And honestly, at this point, probably too big to fail. Probably too big to fail. That is, that's how they won. So the exciting thing, if you're a tech company and you were in a space that you were really good, this is an opportunity potentially, because we don't even know the full effects yet. I'm sure if I went into LinkedIn right now and looked at what people are saying, there's a lot of impacts across the board. As we read from kind of like what Rippling said, they are an HR platform, so they work with lots of people on HR. There's lots of people impacted by this. You see here Roku, Roblox, Vimeo. Here's a fun one. Use code BANKRUN. Camp Toy Store pleads for help after Silicon Valley Bank collapse. A toy company based in New York has gotten caught up in the collapse of the Silicon Valley Bank and is pleading customers for help keeping it afloat. Oh my God. Pleading with customers for help keeping it afloat. Camp, a venture-backed retailer, sent an email to customers Friday announcing it was slashing prices and would use sales to help fund its continued operations. Much of the money was tied up in the bank failure. Fortunately, we had most of our company cash assets at a bank which just collapsed. Bro. Me and you. Chewy, thank you so much for the raid. Unfortunately, we had most of our company's cash assets. I hope you had a wonderful, wonderful stream. Just collapsed. I'm sure you've heard the news. Co-founder Ben Kaufman sent an email to customers. He urged customers to use the code BANKRUN to save 40% of all merchandise, an apparent nod to the run of the bank that may have helped bring down the Silicon Valley lender. Camp also said that customers could pay full price, which said it would be appreciated. Kaufman said the company is hopeful that this will be resolved soon. CNN has not confirmed if Camp has funds in Silicon Valley Bank when the bank collapsed. Silicon Valley Bank put under control and use, about which you already went over. So we don't even know the full effect of this. And the market as a whole is there's going to be a lot of ripples, right? When you have a company like Roku that loses almost $500 million, Roblox, I think they said didn't lose that much. Vimeo, I think said they lost the FDIC will cover it. I'm feeling the pain right now. I'm sorry, dude. I'm sorry. I'm sorry. We can chat later, but I'm sorry. I'm yeah. That's shitty. This whole thing is shitty. But yeah, there's a lot more to come. Because like I said, when Rippling has their, I don't know how many accounts Rippling has. What was Rippling's valuation? I think I have that here somewhere. SF bankroll from Rippling unable to pay out. They had versus Honda Civic. I hate that shit. The software company, which raised funding at 11 billion valuation last year, Popular HR was struggling to get customer employees paid. According to an announcement from the CEO, Rippling relied on Silicon Valley Bank to run payments for its clients' companies. And after the US seized the assets, so again, we kind of went through exactly what the CEO said. I think this is actually like really transparent, which is a smart move. I think transparency in a situation like this, like I would take notes for anybody that wants to be a CEO, that anybody that wants to do PR, that anybody wants to do anything like this. I actually think this was pretty well handled. They were pretty transparent pretty early in the morning and was like, hey, this is like fucking what's going down. And I think there was some other like follow-up tweets and different things like that he had about it. But this is going to have a lot of ripples. We don't know the full effect. And I will say, if there is this is the bubble popped right here with even the fact of like Silicon Valley Bank helped a lot of startups get where they needed to go, including payroll checks and including all this stuff, right? The fees were different. How everything they worked, people that they would take risk on. Again, like I said, if you were backed by one of Silicon Valley's best and they were in your Series A, they'll work with you, or seed funding. Like they would take those risks because those risks have always paid off. So the bubble is popping here, but it's also a lot of newer innovation and a lot of those newer companies. Like right now, if I was like, fuck, I got the idea, right? And even let's say it was such a good idea. I had a proof of concept. I got the seed round. Everything went well. Sequoia or whoever, Sequoia is a venture capital firm, but some VC was like, or private investors were like, this is it. It would actually be very difficult, I think, without Silicon Valley Bank. And because of how now people are looking at tech, like your legs are kind of getting cut off from under you. I think it'll be very difficult in a fundraising environment because of that. SVB locked announcement until very close to 1 p.m., which is when transactions today stop. Most companies had no window to move money. Most VCs I know hold their money. Yeah. I was talking about, like, I think what they like it's like, you know, it's kind of like one thing of if it was more of a consumer bank, but it was a commercial bank and some of the biggest commercial banks, right? I think in total, like a lot of the articles I think mentioned, I think it's like the 16th largest bank in the world. And not very many branches, like not like it's not well known. That's why like most people didn't even know it existed until today. I think I've had paychecks and stuff come from Silicon Valley Bank, so I'm familiar with it, but I'm in this world. Not everybody is, and this is going to have major impact, right? People are trying to figure out if it's going to be a depression, a recession. I will say at the very least, the tech bubble is popped. Like the bubble is here. It's going to be some very dark days because now banks are not going, if banks are unscathed, right? Let's say Bank of America, JP Morgan Chase, let's say Charles Schwab, all the usual suspects in the world, you know, the Goldman Sachs, let's say all their stocks, everything rebounds after that. The thing is though, no one's going to want to touch the tech sector. It's going to take a long time to, I think, build confidence, right? And if you guys thought the layoffs that had happened, well, first off, you're going to have whole companies go under, right? Roku said that they were diversified enough that this won't impact operating capital. We don't know how true that is, but you're going to have companies go under. You're going to have employees who are not getting paid. So unemployment is going to kick in really hard. You're going to have people out of jobs. Companies are going to go under. A lot of people have lost money. And then the next phase, you're not going to have new innovation. You're not going to have new companies. You're not going to have new opportunities. So this is the dark days. Like this is very real. And this is going to impact, like I said, entertainment is going to get impacted. A lot of sectors are going to get impacted. Even like we saw, HR is going to get impacted. Like across the board, this is going to send everything out. Think about it. SVB is your payroll and your mortgage is from another bank and your other bank doesn't care. It's 100%. And like, I think that's the scary part about this text is you have individuals that had all their investment money in there. They had their whole company in there. Like everything they did, they're I don't know. I can't imagine what the list is, but I guarantee you there's a sizable list of people that everything revolved around this bank. And again, as we even said from what NPR said, they've hit above their weight class. They've always been pretty solid on hitting above their weight class, right? They've actually been very well. And a part of that is, like I said, in 2008, Tech had enough money to enough things going that they didn't just completely crumble, right? Which means if their core base didn't completely crumble, they actually probably looked pretty good in the 2008 financial crisis in comparison to other banks. And again, because a lot of the lending they do is to companies, tech individuals, innovators, not consumers or your traditional consumers. The housing crisis happened because it was too many consumers should not have been given money or the amounts that they had, and banks weren't doing due diligence because, well, as we found out, they didn't have to because we would just bail them out. And the thing is, this isn't big enough. I will tell you this. The saddest part about this whole thing is those banks, the really fucked up banks, they're all high-fiving right now. They're all they're high-fiving each other because the little guy that's kind of put them to shame is out now. And tech, usually the only time JP Morgan, Charles Schwab, Goldman, all of the usual people, all of those big banks, the only time they get a piece of tech is IPO. It's the only time. It's the only time tech comes knocking to them. It's the only time. That's the only time that they get a piece of the pie is when a company is so big, so valuable that they're like, hey, let's go public. And they're like, hey, come on in, come on. And finally, I've been wanting to talk to you for like 4 years or 5 years or, if you're lucky, a couple of years or like 10 years. Like, come on, let's go. But now they're happy, right? And I think that's kind of the fucked up thing is like, those guys were like, they're cheersing, they're drinking tonight, right? When you have companies that are likely or that are going under, that can't make payroll, that can't pay their employees, that can't pay themselves, their money was good one day and it's bad the next day. And it's because of a bank run too, right? If people didn't, if the hysteria and everything wasn't there, it wouldn't have been so bad. What do I know Roku for? That is like the TV, the streaming box for your TV. That's why this is on the Hollywood Reporter. Yeah. So this is very real. We are in day one, and what we know of are companies are going to go under. Payroll can't be paid for a lot of companies, which means a lot of, like I said, unemployment will spike because of this. And there's going to be much larger, broader market changes and downfalls that are really going to come from this. And it's sad. It's sad. Also, this one's interesting because this one focuses on how rippling worked a lot with crypto. So like crypto's like heavily down right now. Like Web3 is like fucked right now because anybody in that space, again, it was too risky for like most banks, but Silicon Valley Bank they took the risk. And a lot of anybody in the crypto space, in the Web3 space, they call it contagion. But yeah, um, this is something we'll be talking a lot of, but like, the tech bubble's gone. Like, tech bubble's popped. Now, signal decoder. No, it was just like a digital box. Oh, and they have Roku TVs. It's basically, it was like back before you're like, you could have a streaming TV. You get a little box and you can plug it into the internet, and that's how you can watch Netflix and all that stuff on your TV. So they've got the sticks, the box. Roku's so big now that they have TVs. They've got all sorts of stuff like integrated. They probably have their own content now too. But as my final thought here is, I have been feeling so burnt out over tech in terms of like my career. And the worst part is the one day when I'm like, fuck, when it happens, like it'll be my go time. I don't know if I have enough fuel in the tank to do it. But holy shit, I'm going to tell you guys right now, this is where legends are made. Companies are going to die. People are going to go bankrupt. This is a very fucking sad, terrible thing. But this is where the next Bubba Gumps are going to come from. The next Bubba Gump shipping company, right? The next fucking Amazon, the next Jeff Bezos is going to come from this, because the whole industry crippled. And when you're in the dark days, the people that fight and make it to the other side, there's so few that do that, like I said, it's the boat that survived the storm, and then you get all the shrimp, and then you get to build a shrimping empire, and you're the number one shrimping company in the world, right? That's what's going to happen here. So I am conflicted. One, I'm worried about my friends. I'm worried about my well, I don't know. We'll say family. Yeah, no, I am impacted by my family. I'm worried about my friends. I'm worried about my family. I am worried about colleagues. I am worried about peers. I am worried about people I have worked with, that I am working with. Like, I'm worried. Because this is going to be big. And I don't think anyone fully, no one's, I think, to instill confidence in the market, and probably just people are thinking about them. And also, like, we don't have the full details, and they're kind of hoping that it gets sorted out either through a bailout or with the FDIC or whatever it is. I think people are going to really, we won't know for a little while, like, what's going to happen, but a lot of things could go under. This could be, I'm going to call it right now. This is 100% the shot heard around the world for tech and Silicon Valley. Like, this is .com crash 2.0, right? This is .com crash 2.0. But what I will also say is, if we do hit a recession or a Great Depression, this was the shot heard around the world. This, one of the largest banks out there, in traditionally one of the most thriving sectors, working and dealing with the most financially stable and successful people in the world. This is the shot heard around the world. And again, I don't like, I don't want to wait. We haven't even exited the previous 4 recession. Can we finish the recession before we have to enter another one? I mean, this one is going to, this could be bad, like really bad. Like, because again, a lot of working capital just got wiped out. Innovation is like wiped out. And we don't know the full impact on what it's going to have on other banks. We're seeing a little bit of it. And the spin right now is, it's not going to impact us. It's isolated. It's isolated to one bank and to one sector. And I would say this, though, that sector touches every other sector more than any sector. and globally. The only thing that touches globally as much as tech does is probably a major financial institution, right? Is like I feel like the global banking system went down. But you think of tech, they touch everything in all corners of the earth. They touch everything. So I really don't think we have full scope and scale um, of what this is going to look like. And this is something I said we'll be talking probably a lot about because this is my life. These are my people. These are, like I said, friends, family, coworkers, colleagues, peers, people I have worked with, people I will work with in the future. And as much as I, in the last year, have taken more steps to try to get away from this, see, one of my favorite quotes out there is from Laird Hamilton. And he mentioned, if you don't know who Laird Hamilton is, he's a big wave rider. And there's an interview he does in a documentary, I think it was called Into Water. And he was like, the hardest part about being a big wave rider is it's like being a dragon slayer. And he's like, it's really fucking awesome when there is it's really fucking great when there's lots of dragons to slay. When you're killing it, when you are excelling and doing your best. And he says it's the worst feeling on earth when there's no dragons to slay. And he's like, and that's what happens when there's no waves. When there's no waves, then it's not big, it's not ferocious, not fierce. You're a dragon slayer with no dragons to slay. And then you contemplate life and you contemplate your self-worth and all of this. And like, I've felt that when I'm building businesses, when I'm killing it, when I have immense competition, when I am just crushing, and building $1 billion business, that is my Dragon Slayer moment. And when I looked around the playing field of where I had work experience and where I could go, and even honestly at other startups, if I wanted to get scrappy again, nothing felt like I was slaying a dragon again. And the problem is, I really want this to work. I want other things. I want things directly for me to work, especially because like there's not a grand idea I have, and there's not like a baby that I have that like I want to just dig into. But fuck, this is that time that if I wanted to go just fucking face first into tech, just like a 25-year-old me who had starry eyes and wanted to get into this industry, like juggernaut, like I said, the next Bezos is going to come directly because of this shit. Like now is that moment. Now is that time. Now is that time that you're going to see a lot of failure. You're going to see a lot of bad things happen. And eventually, when all of the dust fucking settles, you will have some new winners. You will have some new people. And to everybody impacted, I'm so fucking sorry.